Hey everybody, welcome back to Whiteboard Finance. My name is Marco and I'm here to help you master your money and build your wealth. In today's video, which is sponsored by Policygenius, but more on that later, we're going to be talking about if the housing market is actually peaking or potentially correcting with these spring and summer months coming upon us. So the last time I did a video about this, talking about the housing market in general, was back in July. This was about 6 or 7 months ago. And I think it's important to take a look at these statistics at least 2 or 3 times a year. So without further ado, let's get right into it. This is from census.gov. Just very quickly, just so you know what you're getting into in this video, we're going to go through census.gov talking about monthly new residential sales. We're going to go through a quick presentation from the National Association of Realtors, NAR. We're going to go through some new and existing home sales. We're going to go through all transactions provided by the St. Louis Federal Reserve. And then we're also going to go over 30-year fixed-rate mortgages provided by St. Louis Federal Reserve. And we're going to talk about that compared to the 10-year treasuries. So if you're a real estate investor or someone that is in the market to buy a home, this is a must-watch video until the end. So this is census.gov. We're going to take a look at their monthly new residential sales for January of 2022. This was just released about a couple weeks ago on February 24th. So it's always delayed by about a month and a half or so. So if we look at new residential sales for January, seasonally adjusted, new houses sold are at 801,000. New houses for sale are at 406,000, and the median sales price, not average, this is median. Remember from elementary school, mean, median, and mode. We have $423,300. Okay, so the next release is going to be coming out in a couple weeks here. So if you look at this chart right here, this is actually seasonally adjusted, basically showing you every January for the past 5 Januaries. If you look at January of 2017, we're at 600,000 units. 2018, right around 600,000 units. 19, right about 610, 620, if you will. It starts to pop up in January of 2020, right around 750,000 units. January of 21, we're at 1 million units right here. And then we're actually slowing back down to 800,000 as mentioned. So just very quickly, you can see here that the new home sales was seasonally adjusted to 801,000. This is 4.5% below the revised December rate of 839 and is 19.3% below the January 2021 estimate of $993,000. So that shows that the estimates are coming in a little bit lower than what they expected. So this presentation actually came out last month. This is from the National Association of Realtors. You can see the total existing home sales in general. Remember, the previous slide was talking about new construction. This is total home sales. So you can see we're at 6.5 million. That's about 100,000 or 150,000 less than last January, and basically, almost 1 million more, 900,000 more than 2 Januaries ago. You can see here with the cerveza sickness how this dipped down right here, and then ever since then, it's kind of exploded as well. So if we look at the median price of existing home sales, I think this is very important to touch on because you can see just in a couple years, so if we take like May of 2020 when houses were at 283,000, if you look at that same statistic basically a year later, the median price is at 362,000, and it currently dipped down just a little bit to 350,000. So look what happens in just a few years. I think a lot of this has to do with easy money and low interest rates, which we'll get into later in this video. So this is the existing home sales median price percent change year over year. So if this is January of 2021 and this is January of 2022 on the right side here, it's pretty much business as usual. So you can see here how everything starts to creep up. It shoots up in the summer and spring months when real estate is hot. People are, kids aren't in school. People are buying residential real estate. And I think it's going to follow that same trend, which we've seen here. So we'll see if this January spurs something higher and higher into those spring and summer months. Next slide is total existing home sales. This is the percent change year over year. This slide is the most interesting in my opinion because you can see here from January 2021, this is saying that housing sales went up 23% compared to January 2020. Now, if you look at January 2022 compared to January 2021, it's actually down 2.3%, and it's pretty much down year over year since August. So you can see here August, September, October, November, December, January. These are all flat, as opposed to the spring and summer months of the previous year, which is pretty interesting. So that may be an indicator of something. This is pretty interesting. This is the Realtors Confidence Index survey. You can see here the dark blue is January 2022, light blue is January 2021. First-time buyers, you can see that actually boomed in the previous January. Sales to new investors is going up, which I think was the case in my previous video back when we analyzed June statistics. Then you can see cash sales is up. That's happening in hotter markets like your Austins or people that are moving to the South, for example. They're just coming from California or the coasts with a boatload of money, and they're just paying cash for these things, or these could be investors as well. And then also we have distressed sales and days on market, which we'll touch on here in a second. If someone in your life relies on your financial support, whether it's a child, aging parent, or even a business partner, you need life insurance. Life insurance can give you peace of mind that if something happens to you, your loved ones would have a financial cushion to pay for things like rent, mortgage payments, loans, education costs, and everyday expenses. Policygenius is your one-stop shop for finding and buying the insurance that you need, and getting started is easy. Click the link in the description or head to policygenius.com/whiteboardfinance and answer a few questions about yourself. In minutes, you can compare personalized quotes from top companies to find the lowest price and coverage that you need. You could save 50% or more on life insurance by comparing quotes with Policygenius. Their team of licensed experts will help you understand your options and ensure you apply for the right policy. Policygenius works for you, not the insurance companies, so you can trust them to offer unbiased advice and help you navigate every step of the shopping and buying process. When you're ready to apply, the Policygenius team will handle the paperwork and scheduling for free. Head to policygenius.com/whiteboardfinance to get your free life insurance quotes and see how much you could save. So we can see distressed sales hasn't changed, and days on the market has actually gone down for 2022 with the Realtors Confidence Index survey. So this is pretty interesting. We can see here that existing home sales by region, we have the South and the Midwest making up 2/3 of this pie. And then the rest is Northeast and West. So that means people are buying the least amount of homes in the Northeast. People are getting out of there and moving down to the South, which I understand. Same thing with the West Coast. You have states like Florida that are seeing an exodus. People are moving into either neighboring states or they're moving down south or to other areas of the country, such as Austin, Texas, for example. So I think that slide's always pretty interesting. This one, sales price by range. You can see here that from $100,000 all the way to $500,000, that makes up 67% of the chart. So 2/3 of home sales are happening within $100,000 to $500,000, and then the rest of that chart, 1/3 of it, is anywhere from $500,000 all the way to $1 million plus. So you can see here, I have a reason for this, which we'll see in the next slide right here, percent change in sales from a year ago by price range. I really do think this is happening because you'll see negative 17% from $0 to $100,000, negative 22% from $100 to $250K, and then you see actually huge increases from $250,000 all the way to $1 million plus. So I think this is happening because the price of homes is going so high that the number of homes for sale in this price range from $0 to $250K is actually going down, which we can see an increase from $250,000 and up. These are actually going up quite significantly. You can see from $500 to $750K, 25%, $750 to $1 million, 32%, et cetera, et cetera. So that's the end of this slide. What I do want to show you here is the Federal Reserve economic data from the St. Louis Fed. This is all transactions. So this is the house pricing index for the United States. I actually zoomed out to the max so you can see how crazy these prices have become. So if we see here, the index is actually Q1 of 1980, which is right here where my cursor is. I can zoom down here. This is basically the starting point. This is 100, okay? So everything is based on this. So if you actually go up, the gray parts are actually recessions. So you can see 2001, this is the dot-com bubble. 2008, this is the great financial crisis. This little blip right here is cerveza sickness, so on and so forth. So once we had peak housing in Q1 of 2007, we were at 380, so 3.8 times higher than 1980. And that crashed all the way down to basically 2012, 2013, right around here, to 308. As you can see, since 2012, we've had, low interest rates, a lot of money printing, quantitative easing 1, 2, 3, infinity at the time of this recording. And now we're at a staggering 557.7. So we're 5.5 times higher than the 1980s, okay? So when personal finance people talk about, oh, you can't afford a house because you're buying Starbucks and Chipotle, that's laughable, okay? It's because the price of everything is ridiculously higher compared to wages. So I thought that was pretty interesting. And to end the video, this is the 30-year fixed rate mortgage average in the United States. And you can see here that we basically peaked, if I zoom out to the max, we're looking at 1971 all the way to March 3rd, 2022. So if I zoom in here, you can see highest interest rates were in October of 81, 18.63. So imagine getting a 30-year fixed at 18.63%. So you can see why older Americans wanted to pay down their house as soon as possible, because they're making a guaranteed risk-free, rate-free return of 18.63%. That's crazy. I would do that any day of the week. But as time goes on and rates go lower, you can see here that all the way down in right here, which is basically January of 21, we're almost hitting all-time lows at 2.65. And now, if I actually zoom in just a little bit, if I go to like the last 5 years, you can see here that the 30-year fixed has been starting to creep up essentially since the summer of 21, with a huge jump right here in December and January. So why is that? So typically 30-year fixed rate mortgages, they are tied to, let me add a line here, the 10-year treasury. So if I go to market yield on 10-year treasuries, add that to the data series right here, exit this out, there should be a second line appearing. There we go. And you can see how closely correlated the 10-year, which is the red line, compared to the blue line, which is the 30-year fixed mortgage rates. You can see that they basically almost mimic each other. So this is why you watch Whiteboard Finance, ladies and gentlemen, because you learn something and you become smarter and better looking and funnier and more attractive and just a better overall human being. So that's what you learned today. So what do I think is going to happen? I think that if rates keep increasing, and I think that if supply outpaces demand, we're going to see a correction. I made a video, I think it was maybe a year and a half ago, talking about within 12 to 24 months at the time of that video, so almost upcoming now, that we would see a correction in housing, which has not happened. Prices just keep going up or staying relatively flat, but they're still up overall based on the median home sales, which you've seen in this video. So thanks everyone for sitting through the Policygenius Spot. That's how I make a living. I will be releasing a private community. It's either going to be a Discord or some sort of community where you get to pick my brain for an hour a week, every week. It's private, exclusive, but it will be paid. Think of it almost like a mentorship. There will be courses coming out this year, which were going to be in Whiteboard Finance University, but I decided to release them just one at a time because they're very difficult to create. And then also I'm thinking about creating a web app, which is going to be essentially a net worth tracking spreadsheet that puts your net worth into a pie, which is pretty cool. So thanks everybody for doing that. Stay patient. I will be releasing those things within this year. But until then, have a prosperous day. That was a mouthful. Thank you guys for watching these spots. I really appreciate it. I'm going to be doing more sponsored videos on my channel because that's how I monetize. I haven't, tried to sell you anything. I haven't done anything like sleazy over the years, but the sponsored videos do help, and I appreciate you watching those. Thank you so much, everybody. Peace.